Welcome back, everybody, to another Tips for Mortgage video series. Mike Parkinson, mortgage broker with Dominion Lending Centers in Campbell, British Columbia, joined by my cousin Jaden Bax out of Crossfield, Alberta with Avenue Financial. Jaden, are you ready to talk about some inflation, some changes, and all kinds of stuff going on in the world right now?
Unemployment, bond yields, all that fun stuff.
Holy cow, things are changing. Things are
Yeah.
changing. We've been talking about this for a year and a half now, and I think we're pretty much turning the corner, and so let's get into it. Let's talk a little bit about each thing. I got some notes here we'll go through. So let's talk inflation. Numbers came down to, what was it, 3.1 from 3.8, which is, it just continues to drop, right, from its peak, and we're way down. And one thing about inflation is that if you look at GDP growth, in Canada, it's pretty much next to nothing. It's maybe you're hovering just over 1%. If you really look at it. So, I mean, honestly, the thing is that our economy's it's not growing anywhere. We're just kind of stagnant, stale, right? So
And actually, that GDP, it really, for some reason, surprised the Stats Canada. They were predicting, I think, 0.8% growth for this last quarter. We're negative 1.1. They were off just a little bit there, right?
Yeah, and anyway, we can't even get into the numbers and how they're measured or whatever, but these are just things that we've seen that have changed, the drastic changes. So inflation's coming down. We talk about that. If you take out for the CPI and how they measure the CPI, we take out the actual mortgage interest payments and household rents and all that stuff, then you're pretty much down to the 2% inflation, right?
Yeah, we're down below. Like, I think that, there's economists saying that we're probably closer to 1.5%, somewhere in that range. And so that's inflation is done. We've beat it. We're right. But the problem with that, Mike, is that you really can't take those rents out, because that now, with the people that have already renewed in the last year and the people who are renewing with these rates up high, they're not going to get any, unless they're going with a variable. They're not going to get any relief from that. If you're talking to the fixed, you locked in maybe for the next 2, 3, maybe even 5 years at these inflated rates. So that's pushing into our inflation numbers going forward.
Totally, and it's funny how they can talk so hawkish and scare people so much. They think that rates are never coming down, never coming down. They're just going to keep going up, and then it's not the case. Like, honestly, these rates, 5 to 7%. It's not like they're high astronomical rates if you look at history, but it's because there's so much debt. Like, those rates are extremely high right now. If you compare it to the 1980s when it went up to 22%, if you look at how much debt we have, if people are paying 6% on their mortgage, it's probably like paying 12, 13, 14%, comparable 15%. It's really compared just because of all the debt in the world, right?
Well, yeah, but we're in Canada now, 170% debt to income ratio. 170%. So we were talking a couple of years ago about with low interest rates where we were at, that 135 to 140 seemed to be a reasonable debt to interest rate. It's crazy. Like, the debt just keeps climbing up above our income, and it's literally, it's unsustainable. We both know it's unsustainable, right?
Well, so people are basically, for every dollar they make, they're spending almost twice as much. Like, it's how, and they say that, it's funny. I laugh at some of these headlines. You say, oh, the savings rate is doing so well and people are saving so much. I'm like, well, that's not happening. Some people might be, but a majority of people are struggling. If you look around and you're out there, boots to the ground, and that people are struggling. Like, you just mentioned it. People have nowhere to hide that are coming up for renewal. Their mortgages, buying houses right now for the short term. Even if you take a variable today, your rate is high, right? Yeah. So I mean, what are you going to do? Are you going to spend less than the economy? Absolutely. So demand destruction is happening, and it's happening real quick.
Oh, absolutely. And if you just look at some of those, the GDP numbers that came out, down across the board, right? Like, so we're seeing less on exports. We're seeing less spending at the grocery store for retail goods, all that kind of thing. The only kind of area where spending went up, interesting enough, was government spending, up 7% over the last quarter, right? And so, that's with the doubled up GST refunds to help fight inflation, and this, that, the other. Just really interesting. Like, when we talk about where we think things are going, and when I talk to people today, again, we always go back to the crystal ball. We don't know what's going to happen, but I'm thinking rate cuts by spring, and not just in Canada. It certainly looks like the same thing's going to, even though the United States has their economy growing by 5% on an annualized basis. Uh, the market is kind of starting to look like we're going to be seeing rate cuts come by quarter 1, 2024. What do you think, Mike?
Oh, I absolutely believe that, Jaden, and that's been my base case for a long time. We've talked about this. You and I both agree, and like you say, we don't have a crystal ball, but something's going to happen. And let's talk about the 5% growth. Is it really, or is it the government growing the economy just by excess spending or giving? There was a lot of helicopter money that still went out, and all those tax rebates and all billions of dollars was getting sent out, and so all that stuff's coming to an end. So we'll see these numbers. I think they'll be revised quite a bit. But that's an interesting thing. Let's talk unemployment. What do you think about the unemployment numbers coming out today? I think it was, what do I have here? 24.9 thousand jobs created, but a lot of the hours worked are down. And what kind of jobs are those? And also, unemployment is up to, I think, 5.8. Does that sound right?
5.8, yeah, up to 5.8, and honestly, like I think we come back to it again. Like everybody knows I love working with new to Canada people, follow immigration very closely. I think the unemployment rate is far higher than that. They're not,
Way, way higher.
they're way undercounting students who come in who have the right to work 20 hours a week.
Yeah.
Also, way undercounting people on who are non-permanent residents who are coming in on a work permit who aren't being counted properly. But Statistics Canada has said that they have potentially undercounted the population of Canada based on these two groups by as much as 1.5 million people. So if we pull some of these people in who are all in working age because they're either here as students or as temporary foreign workers, that is a huge bump up to unemployment.
Well, if you look at the household survey, it's totally ridiculously different, right? So number of jobs lost, especially in the US, is drastic if compared to what their numbers are coming out as. And their numbers are just a guesstimate, right? I don't know how they even come up with some of these things. But anyways, let's talk a little bit about banks and their tightening and what's happening. And I'm sure about this lately that the banks are preparing for next year. Defaults and so they're tightening up their lending. It can be much harder for corporations coming up for renewal and for people coming up for renewal to access credit. And our world revolves around credit and cheap credit. So that's another reason why I believe that next year is going to be rising. I think rates are coming down. I think they're going to be 200 to 300 basis points by the end of the next year at some point down. It just makes sense. And the predictions are by people I follow similar to that. What are your thoughts, Jay?
Yeah, absolutely. And so you got to remember that basis points that we went up 475 basis points, right? And that's pretty similar, a little bit less on the fixed side, but that's what we saw on the variable side. I think we're not going down 475 basis points over the next 2 years, unless this recession gets as gnarly as you and I seem to think it might. Maybe we are headed back towards there. But yeah, easily 200 to 300 basis points next year. Could see another 100 the year following to kind of get us back to where we would consider normal interest rates for the amount of debt that our economy has, somewhere in between that 2.25% to 3.75%. That would kind of be in the Canadian mortgage housing market for a 5-year fix for an insured mortgage. Somewhere in that range kind of seems like where we'll settle at as we head into it. What both you and I think is going to be a monster recession.
Yeah, and honestly, we're not trying to be negative here, folks. Honestly, don't take us the wrong way, but if you really dive deep into it, it's just crazy. It's a little scary when you see what's happening under the unpeel the onion, right? Like we've been talking about. Bond yields are down quite drastically. They're basically down to 3.5? What did I just look it up at? 3.5 range.
Yeah.
A 5-year bond yield. Man, they were just at 4.5, 4.6, 10 days ago?
Well,
a week ago?
Yeah, and 3 weeks ago we were up at that 4.8, just about hitting
close to
4.9
range. So and that's when people think, they're going to keep going up and up and up, right? And there's so many theories. People think that when the Bank of Canada, the Fed, and the rest of the central bankers drop rates, that they're going to see inflation skyrocket. Well, I don't know. There's a lot of theories that with a weak inflation follows the economy. If the economy is strong, it's going to go up. If the economy is weak, it doesn't matter what the Bank of Canada, what they do with the rates and stuff. It's all about what is the economy doing? What's the future economy going to look like? And right now, the future economy is looking pretty weak. So I think even if they cut rates, it's going to be because they're scrambling, right? What do you think about that?
No, absolutely. And so what does this mean for you as a mortgage holder? That basically, like, if you're renewing now, you absolutely, everybody's going to do what's right for them. You absolutely can't be looking at the 5-year fix. But I think that even a 2-year fix is starting to get a little bit too long, Mike. Like, we're getting to a point where there's some 6-month fixed products out there. You have to be extremely, extremely careful with those, because most of those are tied back to you get this 6-month fixed, but then you have to renew, or otherwise they have a monster penalty, but you have to renew with us into a 5-year fix.
Right.
So, those might look a little attractive right now. Be wary of those. Strongly on the, I know the 1-year fix isn't attractive in terms of when you compare it with the 5-year fix on a pure rate basis. But if we're looking at how do you minimize the amount that you pay into interest over the life of your mortgage, 1-year fixed, variable, those are the ways to go right now, I think.
Yeah, we're starting to see more and more people. I've had people that I've got a 2-year fix for in the last couple months that aren't up for renewal for a month or so still. And now we're switching to variable. They're comfortable with that based on everything I've sent them. Again, it's their decision. Or a 1-year fix, like you say, a lot of these 1-year fixed are going to give you an opportunity to renew at a much lower rate. If we're right, and I believe we are. Again, no guarantees, right? But the bottom line is that everything's pointing towards weakness moving forward. Everybody's talking about now rate cuts, not rate hikes. So you gotta go with your best decision for your family, right? So if you're not sure what to do, we have a lot of options to discuss with you. So give Jaden a call in Alberta, and give me a call in BC anytime. We're happy to just give you our opinion. If you want to stay where you're at, go for it. But we're just happy to give you a second opinion, and maybe it's something that you can consider, maybe not. So call us anytime. We're here for you. We'll keep you updated on what's going on, because I think it's going to get real interesting here over the next 2 to 4 months, Jay. And going into the Christmas season, we'll see what the retail sales comes back at. It seems like everything's for sale out here right now, and the sales are continuing on forever. So I think there's too much inventory, and people just aren't spending like they used to. They don't have free money anymore. So yeah, it's just really getting interesting. So we'll chat with you next week with another update. Have a great day, and we'll talk to you soon, Jay.
Yeah, have a good one, buddy. Talk soon. Bye.